Hi everybody, this is Gary D with Sentiment Timing, and this is our technical video report for Sunday, October 19th, 2025. Hope you guys are having a fantastic weekend, and let's get started. This is the ES, and the reason why I'm showing is in overnight trading on going into Friday, the ES was getting absolutely destroyed. It was down almost 100 points, and then right around what time is it? Right like when the European markets opened, that's when we just saw buyers step in, and they drove it up almost 100 points off of the lows. And then we ended up, we got into the chop area here and then closed, pretty much near the highs up here. So it was a fantastic move off the lows on it. And right now you can see we had some bullish divergences down here. So this made sense. It was almost like a false breakdown where we took out this support and then came back up again. But now we have bearish divergences on the ES. But if we take a look at the RTY, because this is the Russell 2000, this really did nothing on Friday. It had the drop. And then from there, we just really stayed within the zone, anywhere from right around that 44.50 down to the 41.50. And that's on IWM, I'm sorry. But in any case, it really didn't do anything. And you can see here, if this is just going to be an ABC move, then I would be anticipating that we would see the RUT futures trading somewhere around that the 2,500 area. So that's a little about 3 points, 30 points higher than where it is right now. So that would be $30 on $3 on IWM that we would be looking for on the upside. But you can see right here, here's that channel line. So if we come down, then what we're going to look at is a 1, 2, 3, 4, and then this would be a wave 5, and we'd be looking for the R2I to come somewhere down into the 2400. So that's another 70 points down, and that would mean $7 lower on IWM, give or take. But in any case, I think if they moved up first and then down, that would make more sense. But we have to just kind of wait and see how the open is. But in any case, the Russell 2000, and that's what we traded on Friday for the fund and in the room, and it was just the wrong index. We were able to get out break even, but there's the real money should have been with the spiders doing the straddle trade there. So let's take a look at the S&P here. So here you can see we made the low here. This is that inverted head and shoulders pattern that basically looks almost like exactly how it should. So if this is going to be in play, let's just figure out where the target would be. So let's just say that's the neckline right there. So basically what we would be looking at is a move coming all the way back up to these levels here, up to the 67.23 level. So if it plays out, what we would have to do is, if these lows are taken out, then obviously it's not an inverted head and shoulders pattern. So we can use the 66.27. If that's taken out, then this is just some type of ABC B, and then we made an ABC C, and that would mean lower levels. But right here, like I said, it's kind of consolidating, and I think we're going to get a lot more information when the futures open as far as what they plan on doing. But right around that 66.58 is really, really important for the bulls, because you can see this is the neckline right here. It's also the moving average. So, but this is only a 2-minute chart, so it's not that important. But in any case, if they head higher and they can get above the 66.83, then I'm anticipating that we're going to come up and test the 6,700 level, or possibly even test these highs here at the 66.24. So those would be my upside targets. Downside, like I said, the bears, they got to get priced back down below the 66.28. If they do that, let's just take a look at some of the patterns in play. So right now, this is what I was looking at yesterday or on Thursday night. I said, this looks like we're in some type of ABC pattern. So it's an A, B, and this was your wave C. And you can see we're trading within this channel. And I said, if this is it, then you can see the S&P trading somewhere up near that 66.84. And that's pretty close to where we came on Friday. So there's a couple ways to look at this. Either it's going to be an A, B, C, D, E level, and then we come down somewhere into the 65, 70 level. Or if we break above it, then it was just your ABC, and the upside target is 67, 65. That's if this plays out exactly as it, the pattern's calling. But this would be somewhere at the upside target, would be testing these highs. And remember, just, go back to what I've been saying is where, I'm expecting chaos and confusion, meaning that dips are going to get bid up, then rallies are going to get sold off, and when you're seeing 140 points intraday on the S&P 4 days in a row, there's something, it's not really building a very, very bullish case right now. They're going to have to get it to new highs. The market's going to have to accept it, meaning that the whatever resistance they get through is then going to be used as support. So that's really what they have to do. But I still believe we're in a topping pattern here, even if we have to get up to the 6,800. I mean, the way it's doing it right now, there's a lot of indecision is probably the best way to put it. So again, if we're in an A, B, C, the upside target would be there. Now we could be doing again an A, B, C, D, and then an E, which would bring us down testing to these lows right here. And we have let me see. Yeah, we have some bearish divergences. This is only on a 5-minute chart, but you can see this support right here where we have the moving averages, if they gap below it and we start taking, some of these support levels out, then we're just going to anticipate that we're coming down to test the 6,600 or even down to the 6550 level or the previous support right here. And if that breaks down, then there's a good chance that the top is already in. We're starting that bigger correction that I've been talking about, but I'm leaving the door open that we're going to, we could get a bounce. I think a lot of it, again, is going to depend on how we open tomorrow. So let me show you a 15-minute chart so you can see we don't really have any bullish or bearish divergences. Pretty overbought right here, and this is the pattern that I was showing you also on Thursday where we're building this triangle. Now, if it breaks to the upside, then what we're looking at is probably going to be some type of test or break of these highs. But if it breaks to the downside, then we're looking at a move coming, like I said, all the way down just on this pattern right here. We can even give an exact number. So let's just say it starts here. This is the bottom of it. And just a rough estimate target would be, if it was going to play out, would be somewhere down into this 63.83. So this support right here, if this triangle breaks to the downside, and if it goes to the upside, then we're looking at a test of the previous highs and possibly even the 6,800 level. But as I said, just from this wave structure right here, whether we're still trying to make this last wave 5, we're in the final stages of it. And if this is it, this is the area that I'm anticipating the drop to come to within the next month or so. It would be down to the 61.40 all the way down to the 55.67 level. This would be my buy area. And right here, I'm not interested on the buying because, like I said, I've been saying I think any strength is going to be sold off and it's going to be short-lived. And this is where we're getting that volatility spike right now. So if the bears can get it through this support right here, then we're going to have a fairly quick move down to the 64.24, but more likely coming down into this support area here, which is the 62.50 down to the 61.50. So let's see what plays out tomorrow. Oh, take a look at IWM real quick. So like I said, IWM, that's what we took for our straddle trade, and it did nothing really. It was just banking back and forth. So this could be a little bear flag that we're opening. You can see if the bulls can get above the 244, we should make a move up to this 245 level. And if it gets held down and we go, then this is just a bear flag right here. And we probably have to start looking at IWM coming all the way back down to the 237 level. And if things get really, bear ugly, then we could see it trading somewhere down into the 235. But we have some bullish divergences on the 15-minute chart. So seeing a move bounce back somewhere up into the 247 level, possibly even up to the 248, would make the best sense for me right now. But we have to just kind of wait and see. And they really have to get it above these moving averages that are, that are rolling over right here. But this would be the type of move that I anticipate. Now, on the downside, if we're just looking again at the, an ABC move, there's support that's going to be right at the 240.50 level, say 240. Now, if they're doing a larger channel here, then we can see a move come down to the 239.30. So those would be the downside targets. Again, the bulls are going to have to get it above this congestion of moving averages. If they do, then anticipate a move up to the 248.50 and possibly even coming up and testing these highs. So let's see what plays out tomorrow. Enjoy the rest of your weekend, and I will talk to you guys in the morning.